So it has continued to drop even lower since the previous update where I mentioned our short term. This range between 25 to 27 cents was going to be key in determining if whether or not we were bullish or bearish. And so for the price of ADA to be bullish, what we needed was for ADA to find support within this range and then see a reversal to the upside rather than tap into this range, given that there was a potential WX Y structure that was forming. But the X wave ended up exceeding its typical range between 50 to 88.2% of the W wave, as you can see. And so usually that signals that we're bearish. And so what I'm looking at for right now is for ADA to continue to drop even lower and breach below the local bottom at 24.58 cents. And that will then confirm that what we are forming is a deeper correction made up of a WXY structure, which is something I talked about in the previous update. And I mentioned that the Y wave also has the potential to reach anywhere between 21.84 cents to 23.14 cents. And so the bullish case was for ADA to see a reversal to the upside rather than tap into this range here. And the bullish case, the bearish case rather, was for ADA to drop even lower and tap into this range. And it looks like this is what's playing out right now. And so if I was to remove some of this now, just to make the chart more neater. And what is interesting about this potential correction that's forming right now is that that will then invalidate this bullish case where it could go even higher, given that the X wave, again, would typically reach anywhere between 50 to 18.2% of the W wave. And this range here, if it just so happens that we tap into it, would breach below the 18.2% retracement level. And so again, that then further confirm that we're bearish and we'll see a continuation to the downside play out in the days to come. And if I was to drop down to the hourly chart, what you can see is we've been get rejected multiple times at these EMA levels. Again, further confirming that we are bearish. And we also had this impulsive 5-wave move that played out. So if I was to draw this in, we had a wave 1, 2, 3, 4, and 5. And usually when you have a 5-wave structure that forms to the downside, that signals that we are bearish. So following the completion of this 5-wave structure, we had a correction that played out where we got rejected at these EMA levels. And then we saw a reversal where we then breached below the wave 5. And so as it stands right now, what we are forming is a correction where this 5-wave move formed the W wave, this correction formed the X wave, and what we are forming right now is the Y wave. So again, if I was to bring in the Fib tool, bring this to 27.3 cents. So the Y wave would typically reach anywhere between 1 to 1.236, and that range sits between 23.58 cents to 24.25 cents. And yeah, as it stands, it looks like we have potential to drop even lower towards this range here. Now, we don't necessarily have to, given that we met the minimum requirement, which is the 61.8% retracement level, as you can see. But yeah, given that we are bearish, we could drop even lower towards this range here. And if it just so happens that we exceed this range and then retrace towards the 1.6 level, that will then trigger a 5-wave structure. And that 5-wave structure will then form the Y wave, which would then tap into this range here. And with that being said, we are within the oversold region on the hourly chart, 4-hour chart, 8-hour chart, and on the daily chart, the bears have the momentum, but we are on the brink of tapping into that range. And so given that the bears have the momentum, I'm looking at for ADA to tap into this range here. And from then on out, what we can see is a reversal where we then retest these EMA levels. And if it just so happens that we continue to get rejected at those EMA levels, like we have been doing so over the past couple of months, again, that would then signal that we're bearish. And we could see a continuation to the downside play out where we could tap into either this range between 17 to 20 cents, or worst case scenario, go even lower and tap into this range between 10 to 15 cents to form this Y wave.